All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Friday, everybody. Today's March 28th, 2025. Happy Coreweave IPO day, everybody. That day is finally here. Look, before we get in too much to the financial news of the day, something I got to mention, there was a powerful earthquake in Myanmar overnight or early this morning, a 7.7 quake. We don't really know the full assessment of the damage yet. It's still in the initial reaction of it, but based on some of the videos I'm seeing on Twitter, skyscrapers collapsing, looks like this is going to be a pretty bad one. So if you are of the praying persuasion, this would probably be a good time. Not sure exactly how bad things are going to get, but based on what I'm saying, it's pretty bad. So if you're not of the praying persuasion, good vibes will have to suffice for the time being. That being said, on to the financial news of the day. Look, big story this morning, Softbank. Congratulations. I mean, amazing. Softbank has pledged to make up to a $1 trillion investment in U.S. AI data centers or business parks, industrial parks. You know what? Whatever it is they're going to invest in, who cares? Because this is just a whole bunch of made-up crap on a very important day for artificial intelligence hype. That's what's going on. Softbank just out of thin air grabs a great big $1 trillion number, spouts it off to try to convince retail investors that big money is not pulling back their CapEx. Go ahead and bid up that Coreweave IPO. That is what's going on today. Masa Son or Masayoshi, whatever his last name is, the CEO of Softbank, who is one of the biggest of the AI grifters, is out this morning. He's claiming they're going to invest $1 trillion. Now, why do I think this is just total horse manure, just totally made up? Well, maybe it has something to do with the fact that Softbank, if it were to liquidate everything it owned right now, assuming the value of those things would not collapse in doing so, which is not a safe assumption, Softbank's only worth $300 billion. So you ain't got no $1 trillion, Lieutenant Dan. That's why I'm saying they're just making this shit up, because they are. It's fake. It is absolutely a fake story, and this is an important day for the AI mania, for the AI hype train, the Coreweave IPO. Today we find out, does retail have any appetite for this snake oil that Silicon Valley and Wall Street have conspired to sell to them? And based on all the indications we've seen in the last few days, the answer is no, they don't. We'll see what actually happens today, or in the ensuing weeks, I should say. It's not like today is going to be an all or nothing kind of day. But SoftBank is now worried because, well, SoftBank owns 90% of ARM Holdings. That's another big AI mania stock. And, well, if the Coreweave IPO flops and if NVIDIA stock tanks, it's going to drag ARM down with it, along with several other of SoftBank's investments. So they're just out there worried about Microsoft pulling back their 2 gigawatts of data center capacity, like TD Cohen was reporting yesterday. I mean, it looks like this bubble has peaked, and that now we're on the downside. And it hasn't quite popped yet, but I think that pop is in progress. And so SoftBank is desperate. They're just spouting off $1 trillion number to try to convince people that the money isn't drying up. And look, NVIDIA did the same thing shortly after I posted that the live stream yesterday. You know, I posted that follow-up video about Coreweave lowering their IPO. Do you know how Coreweave actually got away with their IPO? I mean, besides lowering it twice, NVIDIA themselves had to come in and anchor the price at $40. NVIDIA has committed $250 million of their cash to bid up the price of Coreweave shares, or to put a floor under the price. If the price goes below $40 today, NVIDIA is going to buy the shares. They put a floor under it. So NVIDIA is now, number one, buying one of their customers outright. There's this other smaller Lipton AI or whatever they call it. They're buying them outright. They're doing all these other cockamamie round-tripping schemes, making investments in their customers so they can hand that money right back to them. And now they're bidding up or putting a floor under the IPO prices of one of their biggest customers. Blow harder, Jensen. It ain't working. You can see it, guys. They're having to do Masa Son spouting off $1 trillion numbers, NVIDIA putting a floor under the IPO, reducing the IPO, Microsoft pulling back on their CapEx. This whole house of cards is starting to fail. Man, even on CNBC yesterday, by the way, CNBC, way to get way out in front of that one. CNBC is actually saying how bad this Coreweave IPO looks, how the S1 filing was just dreadful, dreadful optics. And all these things between the technical defaults, the lowering of the IPO, and how important this is to the market. I tell you, man, it was like somebody died on CNBC yesterday. And I don't know, maybe that death was Jim Cramer's prospects for getting more money to pump AI stocks. I don't know, because he's like the last one in the world that's still bullish on this, even though he's totally just making things up on the air, like saying, oh, Coreweave just put money in the wrong account, and that's why they defaulted on their loan to Blackstone. Nope, that's not what why they defaulted. It wasn't the wrong account. They spent it on the wrong continent. They knew what they were doing, and they did it anyway because they just don't care about following the rules. Simple. And they got away with it. They knew they were going to get away with it because Blackstone isn't going to shoot themselves in their own foot right before an IPO, which they are selling into. All right, so all that's going on this morning. Congratulations, Softbank, on making up the biggest random number. We also got PCE inflation data just came out moments before we went live. In line with expectations, with a little bit of a miss to the upside on core inflation. We had PCE year over year, 2.5%. That is in line with expectations and flat versus a month ago. The same thing with the monthly numbers. But core inflation came in a little bit higher. We'll look at those charts. 2.8% year over year versus 2.7 expected. And that is up ever so slightly from 2.7. So look, it's largely in line. A little bit of a miss to the upside, but it's not a, oh my God, panic kind of number. It's not an unanchored, unhinged inflation kind of number. But, you know, at the same time, you also have to say, look, as bad as inflation has been for the last few years and the pain that it's inflicted on the average person, any miss to the upside, any inflation at this point just adds to that pain, and it's cumulative. So, you know, the fact that it's only slightly above expectations, I don't think is very much comfort to the average person. Let's put it that way. Also, we got some international, some geopolitical business news going on this morning. First, let's start with Nippon Steel and U.S. Steel. That deal, the Biden administration blocked it in the latter months of their administration. The Trump administration has come out against this deal. Nippon has been trying to buy U.S. Steel. That's been rejected on national security grounds. Steel production in the United States is not a very important industry to our economy. But if you end up in a war, hypothetically, say a war in the Pacific where you need to build ships, you better have some steel production if that happens, especially when the Chinese can outproduce us in shipbuilding by something like 300 to 1. It's that bad. So we can't exactly let our steel business just decay and atrophy away. So they've been trying to protect U.S. Steel. Now, both Republican and Democrat have come out against this merger. Well, Nippon is out today, and they've sweetened the pot a little bit. Besides their $14 billion offer price for buying the company, Nippon has also pledged to invest $7 billion in CapEx to build out more U.S. steelmaking infrastructure. Now, that's interesting. Will that be enough to sway the Trump administration to let this deal happen? Because $7 billion of CapEx will go a long way towards building out that steel infrastructure that we desperately need for national security reasons, although it would be a Japanese company that controls it. It's going to be interesting to see if that changes things or not in D.C. right now. So that's going on this morning. No word yet from any of the politicians on what's going to happen there. And this Panama Canal fiasco is back in the press. Now, we haven't talked about this story very much on the channel. It's been kind of like lingering in the background behind all this tariff stuff. The U.S. has been trying to, I don't want to say muscle in, but it has been kind of forcefully done. We've kind of like nudged our way into Panama to try to force this Hong Kong billionaire to sell the ports around the Panama Canal to a U.S. consortium led by BlackRock. That deal was expected to go through next week on April 2nd. They were going to sign it. This Hong Kong billionaire, his name is Li Ka-shing. CK, I think, is the name of the company that controls it. Well, they're out this morning saying, no deal, we're not going to sign. Now, there's been a lot of pressure from the Chinese government on Li Ka-shing, things like, we're not doing any business with his family or his business empire as long as this question remains. So it looks like the Chinese government is now pressuring this guy to not sell the ports, while Rubio and Trump and the administration, along with BlackRock, are trying to pressure him to sell it. The Panama Canal is one of a handful of vital trade choke points around the world. You know, things like the Malacca Strait, the Strait of Hormuz, the Suez Canal, the Bab el-Mandeb, drink if you listen to Sal Mercogliano. All of these are vital points where so much world trade flows through. And look, the U.S. and China are in a trade war right now, and it could potentially spiral into a hot war or a naval conflict, and these trade choke points will be vital. And also, China has used its ports, ostensibly civilian infrastructure, to slowly weasel its way in militarily as part of this Belt and Road Initiative, where they make these infrastructure investments, and then the next thing you know, you got a Chinese naval base in your backyard. Look, America has naval bases in everybody's backyard too, so I'm not judging here, but this is what China's trying to do, and could potentially result in a Monroe Doctrine situation if Chinese naval ships start sitting pretty in Panama. Well, that is in the Western Hemisphere. And the last time foreign powers started setting up military assets in the Western Hemisphere, we had the Cuban Missile Crisis, and that did not go so well. Could have been a lot worse, but it did not go so well. So we got that one going on this morning. Also, it's one heck of a day, guys. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button and come on back and have your coffee with the melon heads tomorrow morning, because we do this one every day. The S&P 500 is right now down 14 points, about 0.25% lower, although we got some green shoots popping up right here. Not sure what that is. The Dow, meanwhile, is 62 points in the red, 0.15% lower, doing a little bit better than the S&P. The NASDAQ, meanwhile, leading the way lower, 64 points, down by about 0.3% this morning. So stocks are down pretty much across the board. Looking over at the DXY, I didn't set up my chart this morning. I am remiss. It is up by 3 basis points, 104.28. Above that 104 level, a little bit higher than we were yesterday. Also, let me refresh this chart. What's going on here? It looks like this thing just took a big drop in the last couple of seconds. Let me make sure that is accurate. Sometimes these charts are wonky. Yeah, there it is. All right, the dollar is falling. When did that start? It started about 8:05, hit its stride at 8:30. I think that was probably PCE is pushing the dollar a little bit weaker here this morning. Looking over at the bond market, just as soon as my browser cooperates, there we go. We have got the 30-year. Good God. Come on, guys. The computer gods are angry this morning, everybody. Give me a second here while I reload my chart. All right, we'll do commodities, and then we'll come back to the bond market. I don't know what's going on here. Gold right now, $15.86 higher, $3,072 for spot gold. It's up by another 0.5% this morning. And look, guys, gold had a hell of a night. You might notice those June gold futures, that front month contract above $3,100 at $3,106, hit a high last night of $3,124. So all-time high for gold once again this morning. Silver is getting in on the action, although spot is only up a little bit here. There it is. It's flat, $34.41 for spot silver. Hit a high of $34.58 overnight. Meanwhile, the front month silver contract is at $35.31. That's up by about 22 cents or 0.65%. I like the shiny, like to see that 35 handle on silver. Copper, meanwhile, is 0.5% higher. Platinum is up by about 0.33%. Palladium is up 0.9%. WTI crude pretty much unchanged here at 69.89. Let's see if my bond market chart wants to play nice in the sandbox now. Here we go. Get back to the United States. We got to scroll through Europe and the stands here. Okay, the 30-year Treasury, 4.663. That's actually down by about 6 points here. All right, so people bidding up Treasury prices, sending their yields lower. A little bit of a flight to safety going on here. Meanwhile, the 10-year yield, 4.319. That's down 5 basis points as well. The 2-year, 3.978, off by 2 points. And the 1 month is at 4.303. That's down by 1.5 points. So people are buying bonds this morning. Little bit of metals buying. So a little bit of a move to safety here. Bitcoin, meanwhile, not doing so well. Sitting this one out, $85,346 as priced on Coinbase. Also very important, back below that 200-day moving average, guys. We've really been bouncing right around this red line for about 2.5, 3 weeks now. Not sure which way it wants to go. It's pretty clear the bias is to the downside. And this is, guys, Bitcoin is going to trade with the tech stocks here. It's pretty clear that's what's going to happen. And, things for tech stocks not looking so good. Also on Bitcoin news, we talked about this one yesterday. Look at the monster move lower in GameStop shares. It gave up 22% yesterday on news of that convertible notes offering the 1.3 billion, I think was the amount that they were going to borrow by diluting their shareholders in order to buy Bitcoin. GME shareholders were not having it. They were dumping on this news big time. So Michael Saylor's infinite money glitch did not translate to shares of GME yesterday. They had rallied double digits when the board of directors approved the buying of Bitcoin as a reserve asset, but then gave up way more than that when they issued those convertible notes. So not a good sign for GME shareholders yesterday. Now let's talk about this one. This story is just so stupid is the only word I can think of. This is the dumbest thing I have seen in a long time. The fact that Bloomberg is not calling out Softbank for how dumb this is just tells me Bloomberg is more worried about sell-side research than they are worried about pointing out the absurdity of what is going on here. Softbank may pledge $1 trillion for AI effort in U.S., Nikkei says. Where is the journalist saying Softbank doesn't have $1 trillion, not even close? Why is nobody pointing this out? That is unbelievable. But there it is, $1 trillion. Oh, yeah, a great big number. Why not make it a quadrillion while we're at it, Masa Son? Yeah, I mean, I don't think we need to be so conservative with our numbers here. Softbank Group plans to create industrial parks for artificial intelligence across the U.S. and is considering an investment of more than $1 trillion, Nikkei reported. Founder and Chief Executive Officer Masa Son is expected to visit the U.S. to discuss his ideas for such industrial parks, the newspaper said. The factories would likely use AI-equipped robots. Oh, that's great. Why not a time machine? That would operate autonomously because of labor shortages in the country, according to the report. Son teamed up with OpenAI and Oracle in January to unveil a $100 billion joint venture to fund AI infrastructure in the U.S. That was Project Stargate. You remember that one. They said at the time that they would deploy $100 billion immediately with the goal of increasing that to at least $500 billion for data centers and physical campuses. And, of course, tech stocks have only sold off since then. So, we're going to crank up those rookie numbers to a cool trill. Why not? Why not? Never mind the fact that SoftBank just doesn't have the money. I mean, that's an unimportant detail, right? What's the matter? Can't you guys see how cool robots and AI is? Look, this is a purely defensive play. The AI bubble is at risk of bursting. Masa Son stands to lose everything if that happens. And so he's just making shit up, hoping for the best. And the press is not calling him out for it. I don't know why. I suspect I know why. But this is really just a stupid headline. This guy's just making stuff up now. Good luck, Masa Son. And it comes on a very important day because AI uncertainty cools demand for hotly anticipated Coreweave IPO. This one in the Wall Street Journal. Coreweave's initial public offering is also diminishing hopes for an IPO resurgence. It was supposed to be one of the splashiest IPOs of the year. Now Coreweave's stock market debut is turning into a high-profile stumble for both the AI industry and new public listings. The startup that rents out access to NVIDIA chips priced its IPO offering below expectations late Thursday, a sign of flagging investor enthusiasm for AI companies as well as the chilly state of the U.S. market for new listings. Its business took off in 2023 when AI startups were taking any route possible to grab a hold of specialized graphics chips or GPUs that firms use to build and train AI systems that they then sell to companies. One founder at the time compared looking for GPUs to hunting for toilet paper during the pandemic. The supply shortage has since subsided, and companies say it's comparatively easy to buy the required chips. Renting a GPU for an hour cost about $5.50 in mid-2023. It's now $1.55, said Evan Conrad, chief executive of San Francisco Compute, a market for GPUs. Guys, look at that number and think about what that means. GPU hours. Think about GPU hours like the barrels of oil that feed this mythical AI revolution, right? That's pretty much what they are. And the price of a GPU hour has cut by it's less than a third of what it was a year and a half ago. Imagine if the price of oil were to suddenly drop to $20 a barrel. Do you think the oil production companies might not do so well in that environment? That's what's happened to these data centers, to this GPU rental, from $5.50 to $1.55. That is awful. And that's how Coreweave makes their money right there. Coreweave's IPO pricing is likely to disappoint a host of private companies that had been considering U.S. listings. This is also going to be a very big deal for private equity, guys, because there has been a dearth of IPOs for the last few years. There's a few other ones like Klarna are out there. Maybe that one goes better. But private equity companies have been desperate to sell the startups that they invested in because they need to sell those startups in order to pay distributions to their investors. Well, they don't have any profits because there's been no IPOs. And so if this IPO flops, and it looks like it's going to, then private equity is going to have to get even more creative to avoid price discovery, or they're just going to have to bite the bullet and sell into a market that doesn't want to buy, which means price discovery. And well, that's not so good for private equity firms, and certainly not the pension funds that have invested in them. So this is a very big deal, what's going on today. All right, let's talk a little bit about inflation here real quick. We'll go through this because the numbers weren't that profound. The headline number, 2.5% year over year. They downwardly revised last month's number. That should be showing 2.5% for January. Let's see. There it is. Now, nope, we're back. For whatever reason, the charts are not being kind today. There's February, 2.5% in line with the prior month's number as expected. So no big change to the headline there. Same thing with the month over month. We were 0.3% month over month. Same as we were in January and December, same as expectations. So the headline numbers, which includes food and energy, it's pretty much a never mind kind of reading. Now, the core numbers, which strips out food and energy, those were a little bit disappointing. Emphasis a little bit, 2.8% versus 2.7% last month. It was also expected to be 2.7%. So a slight miss on year over year core inflation. Same thing with month over month core inflation. It came in at 0.4%. That's up slightly from 0.3% and above the 0.3% that was expected. Now, of note in this chart, you can see the trend. All right, it's not at a level that you need to be totally freaked out about. It's only a little higher than we've been for the last year. But the fact that we've now got 3 consecutive months of increases, when you view that in the context of consumer inflation expectations, which are rising dramatically, you start to get a little bit worried about this one. It's not at a level yet that you need to panic. But also, guys, with tariffs on the horizon, inflation's not looking great here. Let's just put it that way. You don't need to panic yet, but it's not great. All right, let's talk about this Nippon deal here. Nippon and U.S. Steel offer increased investment to the Trump officials to try to close this deal. This one is out yesterday in Semaphore. Nippon Steel and U.S. Steel are in talks with the Trump administration to salvage their $14 billion merger by offering billions more in investments from the Japanese steelmaker in outdated Rust Belt facilities, according to people familiar with the matter. In recent meetings with White House officials, Nippon has offered to dramatically increase the $2.7 billion it had previously offered to upgrade U.S. steel factories, the people said, with some saying it could be as much as $7 billion. Trump had initially opposed any sale of U.S. Steel, but a press conference in February said he was open to Nippon making a strategic investment. Under the new scenario, Nippon would maintain its $55 per share agreement to acquire the company and would make sizable capital investments as soon as possible. Amid strong opposition from the U.S. Steel Union, Trump has publicly stated that he doesn't believe the Japanese steelmakers should be able to acquire the company. Nonetheless, Nippon has continued to actively engage with Trump administration officials, including Commerce Secretary Howard Lutnick and White House staffers. So Nippon they're up in their offer here. That's $7 billion of CapEx that they're pledging. Is that going to be enough to get Trump to change his public position on that? Will that be enough to placate the U.S. Steel Union? Because $7 billion of CapEx means more union jobs. But at the same time, that national security concern of having a foreign company controlling your steel industry, that has not gone away. And I would also add that we've seen these kind of promises from companies before. Like private equity says, oh, let us buy your hospital. We're going to make millions of dollars in capital improvements to the hospital to treat patients better. The deal goes through. The investments never get made. The PE firm signs a sale leaseback agreement. They strip mine the hospital. And then the next thing you know, it goes bankrupt. So I'm a little skeptical of this deal here. But hey, man, that's $7 billion that they're dangling in front of President Trump there. That might be enough to get that deal across the goal line. And speaking of deals with geopolitical implications, C.K. Hutchinson to delay signing Panama Ports deal, the media says. This is potentially a big one here. This fight over the Panama Canal continues. Billionaire Li Ka-shing, Hong Kong's most famous tycoon, won't go ahead with the expected signing next week of a controversial deal to sell his Panama Canal ports to a consortium including BlackRock, according to media reports. While Lee's flagship CK Hutchison Holdings won't sign the deal, which was expected to occur on April 2nd, tariff day, it doesn't mean the sale has been called off, the South China Morning Post reported, citing a source it didn't identify. Significant details remain to be decided due to the complexity of the transaction, it said. Local media outlets, including Tsingtao, also reported the agreement wouldn't be signed. Now, the planned sale had highlighted the political risks for companies based in Greater China amid increasing trade tensions between the world's two largest economies. That's despite CK Hutchison having limited exposure to both countries. The conglomerate is registered in the Cayman Islands and accrues only 12% of its revenue from Greater China, while Europe, Canada, and Australia make up the bulk of the rest. The move came after China told state-owned firms to hold off on any new collaboration with businesses linked to Lee and his family, and authorities began looking into the transaction for potential security or antitrust violations. Pro-Beijing newspaper Ta Kung Pao reported China's State Administration for Market Regulation will review the ports deal to protect fair competition in the market and safeguard public interest. So the CCP, the Chinese Communist Party, went right after this guy and his family's business holdings, antitrust violations, visits from regulators in China. That's a very serious deal. This guy's from Hong Kong, which might as well be China at this point. While CK Hutchison has kept ports in Hong Kong and mainland China out of the sale, Ta Kung Pao has previously criticized the deal for spineless groveling to U.S. pressure. In a sign of state backing, the commentaries were reposted by China's top office on Hong Kong affairs. The city's leader also weighed in, saying concerns over the deal deserved serious attention and vowing to handle the deal in accordance with law and regulations. So I guess we haven't heard the last of this Panama Canal, what do you want to call this, drama, geopolitical consternation? I don't know what you'd call this. It's a freaking mess is what I'd call it. And right now it looks like the deal is on hold at best. And guys, it is 9:30. The opening bell has rung. Is Coreweave trading yet? We've still got no data shown here for the Coreweave chart. I was kind of hoping to show a ticker price for Coreweave on TradingView. Ticker CRWV. Well, the market's open. Still no data shown here. Let's see what Yahoo Finance has to say. Are they showing a quote for Coreweave shares? CRWV. Come on. What do we got here? We've got... Wait for it. We have got nothing. 0.00. The company's worthless. Let's move on. No, I'm just kidding. It's obviously a misprint, guys. It's probably going to start trading at $40. That's the anchor price that NVIDIA has put up there. But considering it's IPO day, still just not enough data. Nothing to see here, nothing to show. But I do, however, want to say thank you very much to JJ Watt, who said next slot on the 2020s bingo card, strip clubs to accept Klarna as a payment option. All right. Are you interested in 4 easy payments for a lap dance? No problem. We just need to check your credit first or good God. Yeah. Okay. That's a very 2020s bingo kind of thing. But, it's important that you point out Klarna there, guys. A bunch of people, it was late last week, a bunch of people were posting jokes on this deal that it wasn't Klarna. I think it was a firm. It was one of the buy now, pay laters. I'm pretty sure it was a firm. Cut a deal with DoorDash, where now you can pay in installments for, DoorDash to go pick up your McDonald's or whatever. And everybody's making jokes about how, don't worry, we're going to put it into asset-backed securities and sell it to people and sell CDOs against it. And I'm sitting here watching and I'm like, yeah, it's funny, but they're already doing that, right? A firm has been packaging buy now, pay later loans into asset-backed securities, having the ratings agencies blindly stamp them AAA rated, even though the average credit score of a borrower for buy now, pay later is subprime, and somehow subprime credit scores get AAA rated. Oh, stop me if you've heard this one before. It's already happening. So, yeah, all the people who are making jokes about DoorDash's buy now, pay later and asset-backed securities, should we tell them it's been happening for years now? Been trying to warn people about this stuff, but you know what? I'm just a rando. I'm just a Twitter conspiracy theorist, guys. So, don't listen to what this guy has to say. Remember, my commentary is puerile. Stacy Raskin, right? You want to take any of that back, by the way? Now that the whole world can see what's been going on at Coreweave, have you guys noticed? Turn on CNBC when they're talking about Coreweave. They're saying exactly what I was saying 2 years ago about this company. Way to get out in front of that, CNBC. You guys Superb coverage. Fantastic. Thank you, JJ Watt, for the super chat, the support of the channel. And thank you, Nashville Pasta Man, who says, remind me, how much did Softbank lose on WeWork? You know what? We are going to have to consult the Oracle Google for that one. How much did Softbank lose? Oh, look, it came up. Enough people searched that. Let's see. Softbank lost over $14 billion on WeWork. Well, you know what? That's chump change, Pasta Man, because SoftBank has $1 trillion, according to this Bloomberg article this morning. So who cares about the $14 billion they lost, right? Oh, that's right. They don't have $1 trillion, not even close to $1 trillion. And Bloomberg's not reporting that. Nobody's reporting on that. Why aren't they reporting that this is just a bunch of made up crap by a guy who is known to make crap up in order to avoid losing money? Sell side research. That's all I can tell you guys. That's all you get in the mainstream press. But yeah, WeWork. By the way, was it you, Pasta Man, who referred to Coreweave as the WeWork of cloud computing yesterday? Somebody made that comment, and that was pretty accurate, actually. I saw a write-up by CJ Gustafson on Substack, Substack, that basically said the same thing, made a lot of comparisons to WeWork. Fun fact, Coreweave doesn't own their data centers. They rent them out. They own the GPUs that are in them, but they don't own the land. So they really are very much like Coreweave, long-term data centers versus short-term rental arbitrage in between. It is amazing. Well, it's IPO day. We'll see how it goes. Thank you very much, Pasta Man, for supporting the channel. And thank you to Uncle Fedster, says, happy Friday, Jack. Right back at you, sir. He says, let's hope the Iran war talk is some sort of tactic from the art of the deal. You know, trade wars, Iran wars, Ukraine wars, South China Sea, it's hard to tell these days, guys. Unfortunately, sign of the times. The world is in flux. The global order is breaking down. Globalization is breaking down. New battle lines are being drawn. Old alliances are falling apart. New ones are being made. I really don't know what this world is going to look like in the next couple of years. All I can say is when things globally get really bad, it's time for your thinking to get majorly local. All right. The worst things get at the global level. Think more local. That's all I can tell you as far as like preparation and your own planning. If you can't tell what's going to happen in the South China Sea, don't get involved in the South China Sea. Stay in the South Texas area if that's where you hang your hat. Thank you very much, Uncle Fedster. I too hope the Iran war talk is some sort of a tactic. I don't think it is, because I mean we're bombing the Houthis right now, right? And the Houthis are shooting missiles at our ships. We're basically fighting Iran just through proxies. We're in a proxy war with Iran on at least one front, really multiple if you count what's going on in Israel and if you count the never-ending drama in the Red Sea, not to mention cyber warfare. So I'm not so sure it's a tactic. I'm pretty sure it's just a hot war. But thank you very much, Uncle Fester, for supporting the channel. Thank you, everybody, for having your coffee with the Melon Heads this morning. Good luck to anybody who is buying that Coreweave IPO today. Yeah, good luck with that one. Thank you very much, guys, for the super chats, for supporting the channel. Thank you also to my Patreon supporters. Looking forward to seeing you guys at 2 p.m. Eastern time for our weekly get-together on Zoom this afternoon. Links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.